welcome to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena, a show where we'll answer all your stock-specific queries. Our experts will join us shortly and help you with all your stock-specific queries. But before we get started, Ankita, how are the markets looking like?
You know what, Kanishka, in fact, today after, after days of very quiet days coming in on D Street, today we seem a little perked up. We're shrugging off the global cues as far as the tariffs are concerned. We have managed to scale 25,500 levels. In fact, right now on the Nifty, we have turned absolutely flat at this juncture. But what a recovery coming in from the day's lowest point. If you see the recovery, 25,521 is where we are perched at as far as Nifty is concerned. Nifty Bank also, we did see a recovery coming in from the day's lows, but nonetheless, Nifty Bank has slipped into the red right now. But we recovered 96 points from the day's lowest point. 57,159 is where Nifty Bank is at. Let's look at the broader markets then. If you look at the mid-cap space, that is also, it's at this juncture, both are in the green, both mid-cap and small-cap indices. But mid-cap has turned very flat with minor gains of 0.08%, and small caps are outperforming the markets today. They are trading in the green with gains of more than 0.5%. If you can pull up the charts for small caps, more than 0.5% gain coming in on small caps. So that is where the action is coming from. Now, if you look at the sectors, then we have FMCG and auto that is really holding the fort. FMCG is up 0.5%. We have Godrej, GCPL, Imami, Dabur, Varun Beverages. All of these are doing well in trade today. Nifty Auto also doing pretty well for itself. MRF, M&M, Eicher Motors, Ashok Leyland, all of them are trading with upwards of 0.5% gain coming in. On the losing side, we have Nifty Realty. That is the top sectoral loser. The rally that we saw in Nifty Realty, it is now, giving up those gains, and we do see those cuts coming in on Nifty Realty, Nifty Metal and Nifty IT also on the losing side today. But largely, if you look at the market breadth, Kanishka, we do see the advances are, of course, surging ahead of the decline. So largely today, a decent day coming in, especially after this day of a very muted trade coming in on D Street.
That's right. So that's how the market construct is looking right now. But let's get on board Hemen Kapadia, who's a technical associate at DRChoksey Finserv, and also Rajesh Agarwal, who's head of research at AUM Capital, to help our viewers decode all their stock-specific queries. Now, Mr. Agarwal, let's start with you first. Before we get going with all the queries, how is the market looking like to you? Fairly resilient, against the backdrop of the tariff announcement we had overnight. So where do you see the next leg of momentum coming?
Good morning, Ankita. Good morning, Kanishka. Good morning, Hemen. As far as the market is concerned, we have been very bullish on the market since very long period of time, since we do not look at short-term movements because they are basically news-driven. And as far as tariffs are concerned, I think market has already digested that tariffs are to be there. It's just a matter of time when the announcements come. Some countries get those letters day before yesterday. Some might get in coming days. That's the thing that has to be taken with us. But going forward, what I feel is market will now focus more on corporate numbers, which are going to pour in from tomorrow onwards as TCS starts coming out with numbers. And with now the market will more focused on first quarter numbers rather than on looking every day to geopolitical tensions or money down, and all those things. I think now, after the kind of consolidation which we have witnessed in the market from last 8 to 10 days, now the market is poised to move ahead, whether it's upside or downside. That would be something to be watched out for. But what I personally feel is we're going ahead. Corporate numbers would be in focus.
All right, corporate numbers are going to be focused, and after the days of subdued trade, like you mentioned, we'll perhaps see better days going ahead because most of the tariff news has been priced in. But let's get started with the show and with all your stock-related queries and start getting them answered by our experts. Now, you can share your stock-related questions on WhatsApp. Ping us on the number that's flashing on top of your screen, and get investment analysis on your holdings and tips for fresh buys in the market. Write to us as soon as possible. The number is, of course, on your screens right now. But let's get started with the show then. let me take the first question here then. The first question is coming from, they have not given their name. Please start writing your names. Okay, I'll take this question. This is Bharatwaj from Coimbatore. He's saying he has 1,750 shares of Tata Steel at average buying price of 140 rupees. He wants to know if he can buy more at current market price. He's also looking to hold it for the next 3 to 5 years. Let me come to you for this one. Is this the right price to get into Tata Steel, and what do you see for Tata Steel for the duration that he's mentioned, for a 3 to 5 years perspective? Is it a good hold?
A very good morning to you, Ankita. Very good morning to Kanishka, and very good morning to Rajesh ji. I believe that the worst is over. We've been corrective for multiple months now. From a 3 to 5 year point of view, I believe we would be comfortably positive. Would look for a target of maybe 280 or more. To add more, we walked into a short-term decline. I believe I would be more comfortable buying at 154 and 148 rather than buying at current levels.
Okay, so that's the view on Tata Steel. The next question is from Vaidehi, who's written to us from Chennai. She's holding 100 shares of Hindustan Zinc at a price of 484 rupees per share. She would like to hold this stock for at least 6 months. Hemen sir, what would your view be?
Hold as of now, but things are not looking pretty. There is some near-term pain which refuses to go away. In terms of levels, support comes in at 418, 408 and 391. So there's a short-term decline underway, and I believe it could get a bit more acute. So you have to have patience, and if you otherwise, you'll have to keep a stop loss, like I mentioned, at the levels. But currently, clear pressure. It's going to take time for stabilize. 380, I believe, is a make or break level.
All right, moving on from Hindustan Zinc to the next counter. This is Murthy, who's writing in from Hyderabad. He wants to know, he wants to invest 50,000 rupees in ONGC. Is it a good move to buy ONGC shares at this juncture? Rajesh, let me come to you. Now, yesterday also we had a couple of queries on oil-related stocks, whether it's the oil marketing companies or oil refiners, because of the movement that we have seen in crude. Of course, that is a very short-term perspective, but what do you see for ONGC? Is it a good bet? He wants to invest his 50,000 rupees in it. Is ONGC a good bet? He's not given the investment time period, but what would be your advice?
It depends on your time horizon, because at this point of time, somebody looking for a short-term bet, by short-term I mean even 6 months, I don't think nothing is going to happen in ONGC as such, because we have seen crude prices in the range of 60 to 70 odd dollars for a very long period of time. Expect for a 2-3 days stint where it went up to $80. And with OPEC announcing 5 lakh plus barrels of a production being extended, I think crude won't flare up unless and until geopolitical tensions flare up like anything. So for ONGC, if crude is trading at a lower prices, I don't think anything would happen on the stock prices as such. So somebody looking for holding for a larger period of time, it's a very good bet because of the dividend yield it provides, the kind of reserves it had not only in domestic rigs but also in international. But for a short-term period, for medium-term period, I think maximum it can go to up to 260 to 70 odd levels. So depending on your time horizon, you should take a bet. Fundamentally, it's a very strong company.
All right, so that's the view on oil counters. Now, Hemen sir, coming to you, our viewer Ajit has written to us from Kerala. He hasn't really given a time frame, but he's currently holding 40 shares of HUL at a price of 2,575 rupees and also 62 shares of HAL at a price of 578 rupees. He wants to know whether he should continue holding them or exit.
I believe HAL is a very strong longer-term hold, Kanishka. We remain safely ensconced in a long-term uptrend, and we continue to do so. Little bit of paucity of data, but whatever data we have, we have decent data. We are very clearly in a longer-term uptrend. It's a buy on declines. As far as HUL is concerned, most of the FMCG companies haven't done that well. I think Marico has posted a new all-time high, and after that, things have started looking up. So as of now, taking a slightly medium-term point of view, Kanishka, Hindustan Unilever has formed a medium-term base. A close about 24.20 would mean a further upside. The stock seems set to enter an intermediate uptrend. So from a medium term point of view, HUL is looking good. Longer term point of view, HAL is a very clear good stock.
All right, so that's the view coming in on HUL and HAL both. Let's move on to the next question that's coming in from Shaurya, who's writing in from Gurgaon. He says that he wants to know about Axis Bank and ICICI Bank. They are his holdings. He's holding 90 shares for each. They're not, of course, moving higher. He says, should he sell it at this juncture or should he hold on for a longer period? Rajesh, what is your opinion on Axis and ICICI Bank?
Both are very strong banks, and I think the numbers have been quite good in the last quarter. And we believe the numbers are going to be better in the coming quarters because of the fact of liquidity infusion by the RBI, rate cuts happening, and we should not be surprised if trade uptake increases in the coming days. So both are a hold from our side at this point of time. Maybe even one can add if both of the stock correct by another 5% or so due to market condition. But at this point of time, both are a hold.
All right, so a hold call coming in on both ICICI Bank and Axis Bank at this point. But on that note, we'll take a very short break. We'll be back with more on the other side. Welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena. We're a show where we're taking all your stock-specific queries with our experts answering and advising you on your investment ideas. But before we get back to the queries, we have Sharad who's joining us. AMFI data for the month of June is out and record SIP inflows in June, Sharad.
Well, a very strong AMFI numbers coming in for the month of June, and the first time itself the number has gone past the 27,000 crore mark, indicating a strong retail participation in the markets despite the volatility we have seen over the last 3 to 4 odd months. Now, interestingly, the equity inflow that has come in at 2-month high levels as well. Last month it was below 20,000 crore mark, and now it's back to the average of almost 24,000 to 28,000 crores, which we have seen over the last 6 months. Interestingly, the inflows, be it the large cap, be it the mid cap, be it the small cap, all are roaring in. Between 30 to 35% month-on-month jump has also been there. Except ELS scheme, all the equity schemes have shown inflows, and this is the 52nd straight month where we are seeing equity inflows coming in strong. Also, apart from this, if you look at it, the debt numbers have also been decent, but the most important number to look out is the SIP number. It's at a record level of 27,000 crore odd rupees. So that's a very strong indication coming in the markets, especially regarding the AMC stocks as well as the mutual fund data. And overall, the sentiment is back.
All right, Sharad, thank you so much for joining us with the lowdown of the AMFI data that's trickling in. Now, remember, we are sitting at record high levels as far as the SIP inflows are concerned. 27,269 crores is where the SIP number is at versus 26,688 in the previous month. Now, this is the first time ever that we have actually crossed the 27,000 crore mark as far as the mutual fund SIP numbers are concerned, which shows robust retail participation despite the global volatility. But to weigh in more on the numbers that are trickling in, let's get on board Suranjana Borthakur, who's the head of distribution and strategic alliances, Mirae Asset Investment Managers, joining in. Hi, thank you so much, Suranjana, for joining us today. Suranjana, the numbers look very strong for the month of June, and this is despite the tariff concerns, the global volatility. The retail participation remains strong. In fact, if you look at the SIP numbers, it's for the first time that we've crossed the 27,000 crore mark. What is your reading? Give us a sense of your first reading of the numbers that have come out.
Yeah, hi, good afternoon. I think biggest takeaway is the upside in the SIP numbers. I think SIP numbers look very, very strong, which is a very good indicator that, the long-term commitment of people continue to remain in the market. I think also good to see that the upside in the equity numbers, which is at 23,000 crores compared to the 19,000 crore last month, The comeback has not been just in one category, but the biggest inflow, of course, has been in terms of the upside in flexi cap. But we also see a robust inflow in the large cap as well as the mid and small coming back. Thematic hasn't seen a very large upside. There's been a little bit of a cut down in that number. So, which is where I think in terms of the NFOs also which have been coming in this space has calmed down to an extent, but good to see inflows across. But I think the continued inflows in the hybrid segment is also a very important takeaway, because I think last month 20,000 crores of inflow in hybrid was there, but this month it's even higher, and I see a higher inflow in the more aggressive categories where we see like aggressive hybrid category, there's been a huge upside. Equity savings as a category has had a large upside, as well as BAF. While multi-asset has been continually every month getting a good inflow, the other categories had seen a tapering down. The larger component of the hybrid inflow is also the arbitrage segment, where we see that a lot of money has been parked over the last couple of months, where we see that as the uncertainties settle, probably a lot more of that money is also getting deployed over a period.
That's right. Hi, Suranjana. This is Kanishka also joining in. I wanted to understand from you a point that you were making earlier. So, within segments, like you said, small and mid cap is something that is coming back. So, are retail investors showing preference? What kind of preference are they showing for these mid cap and small cap funds, despite those high valuations that we have been seeing?
Yeah, hi. So if you see the inflows in terms of mid and small cap, actually the upside in terms of the mid and small cap has not been very large. The numbers are actually somewhere around 25% in the small cap segment and about 35% in the mid cap segment. But the larger inflow pattern has been in the flexi cap and large cap. I think last month the concerning part was that large cap and flexi, both of them, especially large cap, there was a 50% cut in the inflow numbers, and it's good to see that both these categories are coming back. I think when I talk to distributors in the market, I talk to people in the market, I mean, a lot of recommendation has been to also put in incremental flows in the large cap segment, because large cap as well as flexi cap segment, I think a lot of inflows last year because of the higher returns in the mid and small cap were getting deployed towards mid and small cap funds. There was a little bit of the merit of large cap was being missed out, and there was a little higher allocation in the other segments. So there was a natural reallocation which was required also, since valuation wise large caps were looking more attractive. So we were anticipating earlier that once inflows pattern the pattern starts to show an upside, there will be an incremental allocation in large cap segment. But good to see that flexi cap is also getting a good allocation. Mid and small continue to get allocation, and that is something we have also been recommending, that if you have a time frame which is longer than 3 to 5 years in India, enough allocation to mid and small is much required to create wealth.
All right, Suranjana, absolutely point taken. Mid and small cap is where you really generate wealth, and therefore perhaps people with longer time horizon are parking their money in these funds, and therefore the continued flow. But on that note, that's the AMFI data. That's what it looks like. We are seeing some strong numbers coming in for the month of June, especially the SIP number, which sees continued retail participation despite global volatility. In fact, it is a spike up of almost 1.7x on a month-on-month basis. So robust numbers coming in there shows good market participation, and the risk on sentiment is back in the market. But let's get going with all the questions that you have been sending us, and let's get on guests on board again. Hemen and Rajesh, who've been waiting by patiently. Let me get the first question. This is by Padma, who's a senior citizen, wants to know if Tata Steel is a good buy at this current juncture for the short term. Rajesh, why don't you take this question?
See, short term, I don't think it would be a good choice, because a lot of things depend on the kind of volatility the world is witnessing right now because of various reasons. And metals as a pack is fully dependent on China numbers. So if something comes negative from the China number, that would be again very volatile. But longer term, yes, it's a very good buy because of the kind of capacity it has. the kind of infrastructure and real estate boom which we are witnessing in our country, and the kind of consolidation these stocks have taken since a very long period of time. The valuations are very attractive. If you have a longer term horizon, by longer term I mean at least 12 to 18 months, it's a good buy.
Okay, so a good buy, Tata Steel, for the longer term, that is 12 to 18 months. But Hemen sir, I have a question for you. Angad has written to us from Indore. He bought shares of Jubilant Food at a price of 686 rupees. He wants to know whether he should hold or sell in the short term.
Not sure what his short-term time frame is, Kanishka. But if it's short term is for a week or two, I think then he needs to book. He needs to exit. He went at a shorter term downtrend. If his view is from a slightly medium to longer term point of view, a close above 780 should give you at least 10, if not a 15% upside. But yes, short term sell, medium term hold, or maybe even a buy.
All right, with that, it's time for a quick breather. Don't go anywhere after the break. We're getting all other questions answered on the other side, so stay tuned. Welcome back. You're tuned into Buy Now Sell Now, where we're getting all your stock related questions answered by our experts. The number is flashing on top of the screen. Keep sending in those questions. Please write to us your stock specific question, the buying price and the holding period, and your question, and we'll get them answered. So let's resume with all the questions then. This one's from Ravi, who's writing in from Belgavi. He has a MTAR Tech for 90 shares of at 2,342 rupees. He wants to know if he can hold it for the next 6 months. He wants to know whether he should, what should he do, whether he should sell, hold, or start averaging in. Hemen, what do you see for MTAR Tech?
Frankly speaking, has underperformed. Has been it's peaked in 2023. For the last 2 years, it's been down in the dump, so to speak. Having said that, oversold. The short-term picture is currently on the mend. The medium-term picture has also improved. Simply put, we're currently at 1585. His cost is far away. I don't think that comes in a hurry, or maybe probably even not in this calendar year. Firstly, a stop loss at 1540. 1610 is the first level over which things should look better on the shorter-term charts. And if things are going to improve significantly, we need a weekly close above 1650. I'd say worst is almost over. Things are looking better. Hold, but her cost is going to take some time. It's some time away.
Okay, so that's the view on MTAR Tech. But moving on, Rajesh, now coming to you, our viewer Venkataramani from Bangalore has written to us, wants your view on Hindustan Copper. They have 280 shares of Hindustan Copper at a price of 236 rupees per share. What would you advise them, whether they should hold it or sell it? Their holding period is 15 months.
And continue to hold. There has been a huge spike in copper as a commodity yesterday night. I think that's going to percolate to stock prices also. Going forward, the realizations are likely to be good. Offtake has been increased with the demand going up in EV and other spaces. I think the prospects is good. The company has huge reserves, gives out good dividend. It's a hold from our side.
All right, a hold coming in on Hindustan Copper then. Moving on to the next question. This is Anita, who's writing in from Pune. She wants to know about HUL. Is it a good buy at current levels for the short term, or any other FMCG recommendation for the short term? Now, FMCG has been an underperformer. Now on, do you see moves coming in for HUL and any other stock recommendation from the FMCG pack? And is short term really a good time frame to be holding an FMCG pack for it to give returns?
Very valid question, Ankita. And I really don't think short term is a sort of time frame you look to associate with FMCG. Having said that, well, they seem to be in a tearing hurry to play catch up to, like I said, Marico. Dabur was something which I liked, but the stock has moved from sub 465 to 520 plus in a few weeks. Now, if FMCG stocks move that fast, you want to take it easy. Hindustan Unilever is in a short-term uptrend. I believe this is getting percolated on the weekly charts. and we are on the cusp of entering an intermediate uptrend. Having said that, I would buy Hindustan Unilever only on a decline. It's a conditional buy. We're currently at 2422. I'd be more comfortably buying it around 2390. Once that level comes in, you keep a 30-point stop loss and buy it for the shorter term. I think the risk reward ratio should be significantly in your favor.
All right, so that's the view on the FMCG sector. But Hemen sir, keeping it with you, we have a question from Padma Sivarao from Bangalore. They want to know your view on Laurus Labs. They say they couldn't buy at the price of 575, but now that there has been so much upside in this stock, would you advise entering at these levels as well? Do you see more steam left for this stock?
The stock is in a short, medium, and longer term uptrend very clearly. It's ticking all boxes, but it's moved up. It's moved up from 280 to 800 in the last couple of years. So, and currently we are sitting on top of a steep rise from 640 to 800 in just 3 weeks. So I would say temper your expectations, wait for a decline. And if the stock has had such a significant run up, I like the stock though. I am not sure if it quantifies as a buy at current level. Unless there is significant time price correction, I wouldn't advise. And if you still insist on going ahead, keep a short-term stop loss of 760 and a positional stop loss of 720 in case you do venture in. I'd say wait for a cool off. That does not mean it doesn't go up further from here.
Right, that's the view on Laurus Labs then. Let's get on to the next question then. This is Persil Matthew from Kerala who's writing in. He's bought 10 shares of Hero MotoCorp last September at an average price of 5,088. Should he sell this or buy more to average in? Let's come to you, Rajesh. Hero Moto, last 6 months it is given actually the entire auto pack. Do you see the auto pack now doing better going ahead? Some bit of a re-rating coming in on the auto pack, and what's your view on Hero Moto?
See, as far as Hero Moto is concerned, I think one should try to exit at the counter because though the fact that the numbers are starting to doing well in the rural side, but still on the valuation parameters, I think in two-wheeler space, Bajaj Auto is a better fit. If I top up the entire auto pack, I think Hyundai is one company where one should have eyes on because it has a diverse product portfolio and that has a competitive edge over its rivals. The SUV Creta is the market leader. Of course, they are going for expansion, 32,500 crore expansion, which is going to be funded internally. And that's the best point. They are moving more into export market, focus more onto export market. The EV Creta has been taken very well. I think at these valuation, Hyundai is a better bet than Hero Moto.
Okay, so that's the view on the auto pack. But Rajesh, we'll keep it with you. We have a viewer, Manoj, who's written to us from Mumbai. They haven't given us a time frame, but they have 300 shares of Dream Folks at a price of 220. They want to know what the future is looking like. Is there more upside likely going forward?
See, the stock has taken quite a lot of beating in the last 2-3 years. I would say we're trading at almost at 500 odd levels and now trading at 160, 170 odd levels. And with a whole lot of negative news coming in about, firstly, a lot of banks opting out of giving loan services to credit card holders. And then the completion rate is up from different airport operators. And still now, I don't think there is any hopes in the near future because numbers were also very bad. So, yes, the valuations have become attractive because of the kind of beating it has taken, but it would take a very long period of time to give some meaningful returns. Maybe a target of 200 odd rupees in the next 12 to 18 months is possible, but that would be a long, painful hold. So if you're ready to hold for that kind of horizon, then you can continue to hold.
On to the next counter then. This one is from the pharma pack that's coming in. Now this one is by Renuka Thomas, who's writing in from Trivandrum. She's saying she has Dr. Reddy's at a buying price of 1,225 rupees, and she's been holding it for the last 6 months. She wants to know if she should be holding it or selling it. Now, interesting, Dr. Reddy's hasn't really done much in the last 6 months. In fact, it has been correcting, and now with this entire tariff news that has come in overnight for pharma stocks, a threat of almost 200% tariffs, and especially Dr. Reddy's, which hasn't almost 45% exposure to the US markets. What would be on the cards for Dr. Reddy's, Rajesh?
It's one of the best pharma names in the entire pack, I would say, market leader. The entire pharma space has not done anything in the last 1.5 years, except for a short period of time But now I think the entire pack has started more looking up. The only sword hanging on our head is the tariff part. When that gets over, I think these are good long-term bets. Some of the good names in the entire package, Dr. Reddy or a Cipla in the mid-cap name, one can have a look at Laurus. So yes, for a long-term bet, we are very bullish on the entire pharma pack, Dr. Reddy being one of them.
Okay. So that's the view on the pharma pack. Now, Hemen sir, coming to you, we have a viewer Shri who's written to us from Bangalore. She has 1,000 shares of BEL at a price of 402 rupees. She wants to know if she should book profits at this juncture, or should she wait till the stock reaches those 440 or 450 levels.
A short-term correction is around the corner, Kanishka. So I believe there could be near-term pressure. Stock is very clearly in a longer-term uptrend. So if it's a longer-term hold, I would not advise selling now or selling at 420, buying at 400 again. But yeah, if the view is from a slightly shorter-term point of view, I think time being one can book, because it's had a run-up, it's overbought, some negative divergence. Succinctly put, there could be some near-term pressure coming in, but once again, I repeat, it's only near-term. The bigger picture remains positive.
Moving on from BEL to the next counter from the capital markets theme. This is Muni Rajulu, who's writing from Tirupati. He says he's bought CDSL 100 shares at a buying price of 1,289 rupees. He wants to know if he should be holding it for the longer term. Rajesh, coming to you. The capital market is a strong theme to be holding, and CDSL out of at least as compared to BSE hasn't moved that much. But there are looming concerns of F&O volume concerns that are headwinds for these companies. What is in your view on penciled in for CDSL?
What I personally perceive in this market, intermediaries market, volume concern will always be there. It's kind of a cyclical market. When we are in a bull market, the volumes are very high. When we are in a bear market, the volumes are very low, and it goes on. So I don't think that much of a concern there. All these companies, be it CDSL, BSE, NSE, MCX, CAMS, they're going to do well in the long-term horizon. We have just seen the SIP numbers coming in our program only. So this is the kind of enthusiasm which the retail has towards equity. So I don't think that's going to go down anywhere very soon. So these companies are going to do well. The numbers are exciting. They have added a good amount of clients. And at these valuation also, if somebody is willing to hold for a long period of time, by long I mean at least 2 years, 3 years, or even more, these can give very good returns. In short term, there might be volatility because of profit booking and other news flows, but for a longer term horizon, these are good buys.
Okay, so that's the view on CDSL and other capital plays. But with that, we'll take a very short breather on this edition of Buy Now, Sell Now. We'll be right back with more on the other side. Welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena, a show where we are answering all your stock-specific queries. Our experts are right here to answer all your queries. So let's get back to the queries then. Now, Rajesh, I'll come to you for this query. Ramki from Delhi has written to us. They say they exited Laurus Labs and Paytm at the lowest levels of 293 and 393. They want to know now that they are at much higher levels, is it a good time to enter these stocks again? What's the long-term outlook on these two?
Paytm and Laurus, you said, right?
Yeah.
Okay. First thing, Paytm, stay away from it if you are a long-term investor. For short-term trading, of course, it gives opportunities, but for long-term, I think any meaningful numbers coming in would be a distant dream at this point of time, because we have seen the numbers going bad to worse and again moving up ahead. The competition is heating up. So at least for an investment purpose, stay away from Paytm. Laurus, it's a strong buy in the pharma space, I would say. It's a strong play on CDMO. The ramp up of the CDMO business continues. EBITDA margins has improved. If you look at fourth quarter numbers, there was very strong numbers, I would say. CDMO business grew by about 95% year on year and 15% Q and Q. The entire CDMO business of the total revenue at this point of time is 28%, which was 13% in FY19. And it's expected to move up to 33% by FY27. That's the kind of ramp up which we are witnessing into CDMO. They have very good tie-ups with certain companies for their CDMO business. And if these tie-ups improve, I think this can give phenomenal upside from these levels. The capex of around 3,400 odd crores has already been done in the last 4 years, and the numbers are going to be seen in the coming quarters. So it's a good buy at this point of time. It has run up quite a lot. I don't disagree to that. There might be some amount of consolidation correction going forward. For a long-term horizon, it's very good. So buy from Laurus and avoid on Paytm.
Call coming in on Laurus Labs and avoid on Paytm. But let's move on to the next question then. This is Raja who's writing in from Kolkata. He says he holds 325 shares for ITC at an average price of 490 rupees. He wants to know if he should be holding it or exiting. ITC. Again, a player from the FMCG basket that hasn't really given any returns for a while. So what would be on the charts for ITC? Should he be holding it or exiting? He's not given the time horizon again. And I know that is of the essence. But what do you see on the charts for ITC, say, for the next 1 year?
Okay, Ankita, we'll break it up. Short-term positive, medium-term positive. Longer-term, like you said, it hasn't done anything meaningful. And frankly speaking, even now, it doesn't look as if it's going to do anything meaningful. So from a 1 year point of view, not looking very copacetic for an upside. So I would say hold only if you have a time frame for a year, not a year, probably 2 years.
On ITC, only if you're holding it for the next 2 years. Right. So let's move on to the next question. This is Mahalakshmi who's writing in from Hyderabad. She says she holds 67 shares of HAL at a buying price of 2,380 rupees and 1,500 shares of BEL at a buying price of 209. Now, both of them she has been holding for more than a year. She wants to know if she should be adding more book profit and make some profit, and then she says there's no urgency for money. She can hold on to these counters, but she wants to know if she can book profit on these counters at this juncture.
This is for?
Rajesh, you can take this. I'm sorry.
Okay. See, the entire defense theme is looking very exciting with the kind of geopolitical tension going across the world, government's focus on defense expenditure, Indian of defense, and I think the entire world is going to increase their allocation towards defense. As far as HAL or other companies are concerned, they are sitting on good order book, coming out with new products. Not only new orders are coming in from domestic markets, but also internationally orders are pouring in. Long term looks very exciting, I would say. There might be some correction consolidation going forward, but for a long-term investor willing to hold for 2-3 years, I think these companies can give very good returns. So it's a hold from our side. And by any chance, if some correction happens from current market price of say 7 to 8%, then that would be a good buy for companies like BEL, Cochin Shipyard, PDL, and the likes. Even BML is a good bet.
All right, so that's the outlook on the defense pack. But that's all the time that we have today on Buy Now, Sell Now. Thank you so much, Rajesh and Hemen, for joining us today and answering all our queries that our viewers have been sending us. But with that, we'll wrap this edition of Buy Now, Sell Now. It's a goodbye from me and Ankita. Thank you so much for tuning in.